Big tech earnings are meantime about to kick off, with Amazon, Alphabet, and Meta among the names reporting next week. My next guest covers all three, but is singling Meta out today. He's reiterating his buy on the stock and raising his price target to $6.75. This on the company's ability to generate double-digit revenue growth despite all of their AI spending. And the stock is up 60% this year. Brent Thill is here now. He's an analyst at Jefferies. And Brent, Meta's been one of the great stories. You think its run continues? This is akin to what we were saying about other outperformers lately, like gold, like Bitcoin.
Yeah, Meta is in a great spot. They continue to take market share. They're in the right position with AI. Zuck has been lifting weights and wearing cool T-shirts with the necklaces and kind of staying out of the way. And I think advertisers have appreciated his workout routine, which is helping the overall business. And we continue to think they can sustain mid-teen growth. You're on a pathway to get to $30 of earnings power. If you look at other leaders in AI, Microsoft, NVIDIA, others, they're all trading at 30 times earnings. If you get to $30 of earnings power in a year or two, and you merely put a mid-20 multiple on it, you're going to get a much higher stock. So we think, again, that the risk is the stock's had a big run. Many things I'm talking about are known. They've had a great trajectory. Do they have to raise CapEx higher than the street has it? We think there's a risk. Do some of the advertising data points start to soften a bit as we get outside the election cycle? There's a handful of concerns that we have, but we do believe, again, in this durable $25 to $30 of earnings power. And when you think about, you don't have to put a big multiple on it to get a higher price, even while the stock has had a big run.
Can we turn to Microsoft, which I believe you also cover? I mean, that one has been underperforming, even the S&P this year, as more people are wondering just how impactful Copilot will be. Incredible to watch it go from first out of the gate, showered with positivity and praise for everything it was doing with OpenAI and on the AI front. Now seems to be playing a bit of catch up.
Yeah, I think everyone was overweight Microsoft, Kelly, and they're basically just selling the stock. They're going into other names. They're going to energy. They're going outside tech. They're going to financials. They're going all other places. And so I think Microsoft has had great fundamentals. It's one of the best management teams. It's one of the best CFOs that we work with, Amy Hood. You effectively right now are just seeing a broadening trade. There is no AI in software yet. We've talked about this. It's better to be a semi and hardware analyst. Those stocks are up 50 to 150%. Software's up low teens. And it's underperformed everything. And it's because there is no AI in software today. There is no material monetizable revenue in a big way. Now, Microsoft's monetizing it better than anyone, but it's still a low single-digit % of their total revenue. I
mean, you're striking an upbeat tone to say that it's not in there yet, whereas some say it's, killing the whole sector, and you're more arguing that, its transformation has yet to begin and could pay off. Yeah. Just to get inside baseball for a second on the Salesforce piece, which Jeff Smith was talking positively about this morning, given the changes there the past couple of years. Benioff was also criticizing Microsoft. We talked about this on the show yesterday, the way it's trying to now talk about agents as a way of delivering or boosting the impact that its AI Copilot can have. And Benioff's dismissive of that, which implies that, Salesforce now sees itself in a bit more of a better position than it might have been a few months ago. Do you agree with that?
This is nonsense. I'm a huge fan of Mark, but that's nonsense. Microsoft's revenue is so much higher in AI than Salesforce. I mean, Salesforce is in a good spot with Agentforce. We're a huge fan. But that's marketing, and Mark's really good at marketing. So we think Microsoft, again, is the furthest out. They started this revolution. They partnered with the best company, OpenAI. They've had the most revenue impact. While it's still tiny, they are in an incredible position. So it doesn't matter if you rename it Copilot, Agent, whatever. It doesn't matter. There's a bigger meaningful chunk of revenue at Microsoft than at Salesforce at this point. Okay, so that's just the facts. So Mark's good at marketing. That tweet is or X link is I think is marketing.
Post on X or whatever we call it. So Brent, heading into the thick of earnings season and with some of what the comments you've just made about software and the rest of it, are there other areas of opportunity investors can get ahead of now, places that we might see, upside beats, or even over the longer term, 6 to 12 months time? Are there a few of these names that have been left behind that you think are going to catch up?
Yeah, I think software is going to play catch up. Again, all the software companies are buying the AI infrastructure, so this has to work. And if we get this AI rolled out in 25, 26, software will play catch up. So I think software as a category, the IGV is the index. You buy the IGV. We think other companies like Snowflake, who's one of the worst performers year to date, that can be a catch up trade for 25 as the new CEOs come in and put new infrastructure and routes to market and development in. That could be a catch-up trade for 25. We think the hyperscalers are still the best ways to play this. Microsoft, Amazon, and Google. Microsoft and Amazon particularly. So our AI trade for enterprises, Microsoft and Amazon. For consumer, we really like Meta and Google.
Yeah.
Those are kind of the four big names are going to benefit the most.
And obviously those are more consensus, but I'm very curious to see if you're right about Snowflake and the IGV and software participating more broadly.